Hey guys, John Grogan with Virtuous Roofing and Restoration here. We are doing a series on insurances and what it looks like when you're filing a claim with your insurance company if you have a storm in your area. Last week we went over the start to filing the claim and what that looks like in that process as far as the steps beforehand, getting an insurance adjuster out to your property to evaluate things, and I believe that's where we left off. So after the insurance company sends an adjuster out and they look over everything and they get basically a scope of work of what all needs to be repaired and replaced, there's two things that they're going to send you. So for one, they're going to send you a check based off of the damages, and then two, they're going to send you a scope of work. And that scope of work is going to have basically everything listed out from, what type of policy you have, how much they're paying for things like the roof, the gutters, everything like that. But there are two things that I want to focus on today in this video that are going to affect those numbers, and it's going to affect that check. Because you'll look at that paper, you'll see a bunch of numbers, and it's going to be very, very confusing. And a lot of times what you'll see is those numbers don't align from what they give you. So the first thing is your deductible. You want to know beforehand when you file the claim what your deductible is and whether it's there's two types of deductibles. There's a fixed rate deductible, which is something that never changes, really. I mean, it's either a $1,000, $2,500 deductible, and it usually depends on the type of policy that you purchase. A second type of deductible would be a percentage-based deductible, and in which case it would be the percentage of your home. So if you have a home that's, $200,000-$300,000 or something like that, normally it would be a percentage, a 1 to 2% on that. Obviously that's much, much higher. So that's going to be the first thing. The second thing is going to be the type of policy you have. You have RCV and ACV, and you'll see both of these things on your scope of work. The difference between those two things, RCV is real cost value. That's what it stands for, what it's going to cost you today to get these things replaced. ACV is based off of depreciation. So it's based off of the age of the home, the age of the products on your home, how long they've been there, and they basically pay out based off of that. So if you have a 20-year-old home and you haven't gotten anything done in the past 20 years to that home, your depreciation is going to be much higher. So as far as those two things go, or three things, as far as the deductible, the RCV, and the ACV, all of those are going to dictate what the first amount that you get from the insurance company is, what the second amount is, and the total withholdings that you'll have in your policy. So, and in the next video, we'll dive more into that, and we'll have a presentation up so that way you can actually see what I'm looking at. But as for now, I'll see you guys on the next one.